Bitcoin's going to have the higher Sharpe ratio. Bitcoin's going to have the higher vol. Bitcoin's going to have the higher performance because it's engineered and it's accessible. There's going to be someone in a country doing something with capital that you don't understand, that's illegal in your country, that's going to make you money. I think that Bitcoin will outperform the S&P index. In the history, right, Bitcoin's been decelerating from 120% a year growth to 100% growth to 80%. It was clocking at 80, 90% when I got into it. It's been about 55 to 60% for the past 5 years. If you look at the rate, my forecast is it decelerates from 55% ARR down to 20% ARR over 20 years. Why is it decelerating? Well, obviously for the law of large numbers, when you've got $100 trillion asset, you're not going to grow 80% at that level. It's decelerating because it's merging with the capital markets, and as it merges with the capital markets, then there's less and less money. It's harder. I mean, anybody knows $1 million company can grow faster than $1 billion company, which can grow faster than a $10 billion company, which can grow faster than a $100 billion company, which can grow faster than a $1 trillion company, which can go faster than a $10 trillion company, which can grow faster than a $100 trillion company, right? Not complicated. It's simply the law of large numbers and math. The 20% target is, if I look at it, if you want a bucket of the most high quality scarce capital in the world before Bitcoin was the S&P index. It's basically equity capital that's managed, via buybacks in order to stay reasonably scarce. And you know what that benchmark is. It's been about 10% a year for 100 years. Mm-hmm. Right? So what are you going to get from the S&P? 10 to 12%, 10, 13. The actual amount's going to be a function of the growth and in the equity plus the expansion of the money supply. I think that Bitcoin will outperform the S&P index. And I think it's very simple as to why it will outperform the S&P index. It doesn't have the counterparty risk of corporate structures. And it doesn't have currency exposure, right? So the S&P is saddled with a huge amount of corporate risk factors, dozens and dozens of them, tariff, supply chain, etc. It's got legal risk, it's got political risk, it's got physical risk. I have warehouses, I have nexus, I have an operation in Ukraine, I have, natural gas facilities in Iran, right? There are a lot of things in the real world that constitute risks in the S&P. If I strip away the physical risk, and if I strip away the political risk, and if I strip away the management risk, and then every company takes in cash flows and pesos and naira and euros and CNY and rubles and dollars and Canadian currency and AUD and whatever. So when you strip away all of those risk factors and keep the pure capital, you've got Bitcoin. So whatever those things are, Bitcoin will be more than that. How much more? Or what is the cost of that? 6 to 8% a year. So if you're targeting the S&P at 12, you target Bitcoin at 18 to 20. Why will it be 18 to 20? I stripped away the risk factors. I also stripped away the constraints. For example, you cannot go long 50x on Apple stock on Sunday morning in Iran, right? You can't, right? We could talk about why you can't, but you just can't. So you can't go long and you cannot short an equity 20x on Sunday morning. So you have all of these guardrails on equity, and they limit the leverage, they limit the utility, if I had pure capital and I could have unlimited leverage, unlimited utility anywhere in the world, 24/7, 365, there are no holidays for Bitcoin, right? So what happens on a bank holiday to a security that you should short or you should go long? Well, you can't. Okay, so that bucket, that benchmark, which is the S&P, it's less volatile, it is less liquid, it is less useful, it is more risky, it is more diversified, and it's got some human factors in it too. I mean, the S&P board just decides what to put in it, right? Like maybe they don't put the right thing in. Maybe they leave something that shouldn't be in it, right? So if you're looking for a pure objective monetary index governed by the laws of nature, the most useful type of capital asset in the world to everyone under all circumstances at all times, that's Bitcoin. So, yeah, if I were to say it ought to be twice as performant as the next best thing, that wouldn't be unreasonable. My forecast is it's probably 50% better, maybe 60, 70% better than the next best thing. So my long-term forecast is like 21% ARR and 21 vol. And I would say, the S&P will be more like 10% ARR, 15 vol. Bitcoin's going to have the higher Sharpe ratio. Bitcoin's going to have the higher vol. Bitcoin's going to have the higher performance because it's engineered and it's accessible. There's going to be someone in a country doing something with capital that you don't understand, that's illegal in your country, that's going to make you money, right? Right? The redneck in Arkansas with Bitcoin buried in their backyard is going to make money off of some rocket scientist in Singapore or Beijing doing something with some capital they've never heard of in a way they can't understand, that's either illegal, and they'll be doing it while the guy in Arkansas is sleeping. But the dude in Arkansas is making money. So this is the highest common denominator. Whereas, an American company that owns stuff in Arkansas is not getting its value increased by some Chinese actor, right? Or some, there's no nation state central banker that's going to do something to enhance your Arkansas strip mall or your whatever best idea. So that is the basis of my assumptions about the long-term performance of Bitcoin. Obviously, it's all driven by some base rate assumptions. One base rate assumption is how fast does the money supply expand? Another base rate assumption is how rapidly does technology improve and how much productivity is driven by technology. And if you're bearish on technology and if you believe inflation is going away, then you would probably have a lower estimate than me. You could say it's the greatest global investment index in the world. If you want to characterize as global productivity index, yeah, you could do it. If the world's more productive, that will flow into Bitcoin. Mm-hmm. If the world inflates the currency supply, it'll flow into Bitcoin. If the world is more insecure, that should flow into Bitcoin, right? So it's being driven by chaos. It's being driven by order. It's being driven by conflict. It's being driven by the robots, right? Yeah. Eventually, if the robots do all the work and there's 1 trillion AIs in cyberspace doing the thinking and the cars drive themselves and 1 billion robots build all the robots and produce everything, there's going to be massive amount of equity value created for the companies that own the robots to build the robots. All that money is going to flow into Bitcoin.
If a Mag 7 tech stock came to you and were like, hey, we want to adopt Bitcoin, how would you recommend that they do it? Should they start slow and just deploy some of their cash into Bitcoin, or should they just go on a full Bitcoin standard immediately and issue fixed income instruments and buy Bitcoin as fast as possible?
If you're optimizing for economic results and you had a charismatic CEO, the CEO would say, we've embraced Bitcoin, we're switching to the Bitcoin standard. You would convert all of your discretionary cash to Bitcoin. You would cancel your dividend and make it a Bitcoin buy. You would cancel your buyback and make it a Bitcoin buy. Right? You would basically do everything that strategy has done. Then you would issue debt to buy Bitcoin. That's if you just wanted to make the money. And that assumes, like, who could do that? Well, Mark Zuckerberg could do that, right? If you have a very charismatic, powerful founder that has a controlling interest and isn't insecure about their position, they could do that. If they just wanted to make money. If you wanted to make $1 trillion at Facebook, that's what you would do. Or at Meta. If you're more of an employee CEO and you don't have that much control, you would creep into it. You know, we're going to take 5% of our assets and buy Bitcoin, test the markets, then you would increase it. And you would do all of this progressively over 3 to 5 years, building shareholder support and accommodating them, right? You wouldn't make as much money, but you'd still be better off.
Yeah.
And then you would first test the investors. If they're enthusiastic, you would increase your allocation from 5% to 50%. Then you would, instead of raising the dividend, you would implement a Bitcoin buy. Right, and then instead of raising the buyback, you would implement a Bitcoin. You know, so it would replace every bank, every Mag 7 stock announced an increase in a dividend, an increase in the buyback. You would replace the growth in those things with the Bitcoin program. That's a very incrementalist approach. You'd still make a lot of money. Not trillions. You wouldn't make $2, $3, $4, $5 trillion, but you would make billions or tens of billions, maybe hundreds of billions in time.
Yeah.
So that's what I would say. It all depends on who you're talking to. And, you know, the great irony with Bitcoin is the question is, who wants the money, right? It's infinite money if you want the money, right? It's like, and some people want the money more than others. The irony is the best run companies in the world don't really want the money, right? They don't need it. The question is, do you want the money more than you want to be criticized or ridiculed? If you want to risk the ridicule or risk the volatility, you can have the money. But most successful money managers, most successful corporations, they don't want the money as much as they want stability, and they want to avoid the risk. And so you have to find that rare combination. I don't think you're going to find it with, you're not going to find it with Berkshire Hathaway or the Mag 7 or the mega banks, because they're operating, as a pillar of stability. They've got a good thing. Arguably, the Mag 7 are the 7 greatest companies in the world. So if you have the 7 most powerful companies in the world out of 400 million companies, they're the 7 out of 400 million that least need Bitcoin. I mean, try the bottom 100 million companies. Pick every company in the S&P 500 below the rank of the first 10 that has no hope or chance of competing with the Mag 7. They have more upside, less downside. But it's always hard to predict who will grab an innovation and run with it. And sometimes it comes out of left field from someone that you didn't expect it from.